Welcome to share markets. I've been here for 43 years. What is a share market? Not the book definition, but basically it's an unruly bazaar which has completely shameless salesmen who have gone wrong over long periods of time, continue to exist, made some money, sham fortune tellers, people who know how the market will behave over the next 1 month, 2 months, 3 months, 1 week, right? You find all kinds of people. It's a place where you will find a lot of pigs with a lot of lipstick. You will find every kind of being here, right? And it is not meant for the faint hearted. It's a place where everybody is welcome, and there are times there are no exits, or the exits are so small that we are all rushing out at the same time. Welcome to the share market. This is where you will make money. This is where you will lose money. This is not for the faint hearted. Don't stay if you can't take up all the rough and tumble. Share market is a place where crazy things can happen. Fortunes are made, fortunes are lost. Yesterday's heroes may today not be found at all. They would have just vanished. Promoters who came by Lexus are today not around at all. We don't know where they are. Some of them have gone hiding, some of them have gone bankrupt. You will hear about some of them. It's a place where a share price can go through the roof, can go to the sky and come back very quickly, or stay there for such a long period of time that it takes a lot of people along with it. All these things happen. Are there no rules? Of course there are rules. Do they follow the rules? Well, not always. It is a place which we call the perfect, the pricing is always perfect. It's not true. Lot of times the valuation is way ahead of where it should be or way below where it should be. Lot of examples. I'll come up with some of them as we go ahead. Where better to start than by a Warren Buffett quote, and then I'll give you Indian example. So Warren Buffett says the beauty of stocks is that they do sell at silly prices from time to time. That's how Charlie and I have gotten rich. This is obviously Warren Buffett's comment, and Buffett likes to remind us that there are times when you get silly prices at the stock market. Full stop. Now, BHEL, which is a PSU, was available at 25 rupees not very long ago. I bought them at 25 rupees, and I bought the shares because I was emotionally attached to this share, which I sold at 300 plus in the year 2007. I've spoken about it in the past. So yeah, so the share which you sell for 300 is suddenly available at 25 rupees, and I actually gone on Twitter and tweeted, in Bombay you can't get Bhel Puri for 25 rupees. Once upon a time you could have gotten, today you can't get. So it's a good share at 25 rupees. Look at the real estate that it has, look at the cash flow that it has. Same thing, I could buy BHEL at 25 rupees. I could also buy Tata Power at 30 rupees. That was a time when somebody was telling me I'm going to make money by going short on Tata Power at 30 rupees, right? Somebody beat down the share from 80 to 30, and that was the time when it was available at a silly price of 25 rupees here, or 30 rupees. And here was a Tata Group company. It was in the A group for a long period of time. It was, I think, giving about 5% dividend yield. And enough liquidity, and I was wondering why are these prices so silly. So you could have prices which are very silly on the downside and prices which are very silly on the upside. So on the upside, what can you do? Really not much. The retail investor is hardly going to buy put options on a single scrip. It's too dangerous. I wouldn't advise you to do it. I mean, I know there are people who do it who then, but it's not something for the common man. But yes, sometimes these silly prices are available. So what is the advantage of buying at these silly prices? It gives you tremendous amount of cushion. So having bought BHEL at 25, I can wait for it to go back to 200, 250, 300, whatever, depending on the potential. I'm not recommending the stock, but I'm just telling you the moat that you can build by buying at low prices is huge. So if you have bought Tata Power at 30, at 220, you can take a call. Do you want to put a stop loss at 200, or you just want to let the profits run without worrying too much about the market coming down? Yes, the markets come down, Tata Power can come down. I'm not saying Tata Power deserves 300 or 3000 or 30, but I knew at 30 it was a good buy. So this is just the Buffett quotation of saying At times shares are available at silly prices. Are some silly prices available even now? Yes, surely. The question is, do you want to buy them or do you want to sell them? That is the call that you have to take. One of the reasons why the stock market is doing what it is doing is because of the ease of doing transaction. In the 1980s, it was very difficult to do transactions in the stock market. You had to find a good broker. That itself was a great skill. So you therefore went to a sub broker. So you went to a sub broker. He would then call up his broker and say, "Ye share kharidna hai." That guy going into the market would say, "I go in at 11. It used to start at 11 and end at 3. Look, I'll come back only once at 3 o'clock or 2:30, so better aggregate all your orders and give it to me before 11." And it was not very easy. But today it looks like a game. You just go open an account and somebody tells you, "Oh, Vedanta is paying so much high dividend, let me buy it." There's no logic to buy it, no logic to sell it, except that everybody tells you it's worth buying. So the internet is full of buzz saying, "Oh, such dividend yield stocks are great to buy." So everybody wants to buy a dividend yield stock, whether it is 22, 32, 52, 82 or 102. Right? So the popularity has increased. There are more number of people now in the stock market, and perhaps with lesser knowledge than what is needed, but then they are all there in the market and you have enough. The stock market has to be thanked. The YouTube guys, Google should thank the stock market. Because of them there are so many videos which tell you how you can make wealth overnight, right? So all that is visible now. But what was a disadvantage for us in the 80s is now turning out to be a big nightmare in terms of people being able to buy and sell shares on a phone. Once upon a time, at least people had to go down, use a laptop. I know people who would do something, go out in their car, meet their broker. You have to do all those things, right? So phones were not available. We did not have enough phones in the 1980s, right? So you could call the broker's office once. That's it. After that, if he's already gone into the ring, you couldn't reach him. But today, you just take your phone and key in a few numbers, and lo and behold, you bought the share. Somebody tells you Vedanta is worth buying, somebody tells you Patanjali is worth buying, somebody tells you HDFC Bank is worth buying. You go and buy all of them. Caveat, I have all of them in my portfolio, so I'm just asking you to be careful. Next week I could be buying, selling, whatever, the same shares. That's a different thing, but all the examples mostly come from my own portfolio. So so again, let me go to a Buffett quotation where he'll say, "The stock market will offer you opportunities for profit, percentage wise, that you will never ever see in terms of negotiated purchase of a business." This is so true, because if you I have done this many times in the past. I have arrived at a price and say, let's say 130 rupees is the price at which I was willing to buy, and the share would never ever come to 130. It would hover around 140, and I would be worried that am I overpaying, am I waiting too long, and what happens if it goes to 160? Will my view change, right? Because the price changes, it's your view. Sometimes that also happens, that you change your view because the price has moved up. It's very, very difficult to stay in equilibrium in this market, right? That's what is the market. There are people who will tell you that there is something called a perfect market theory. Market prices are always in equilibrium. It is very far away from the truth. So I will give you numbers from the US. Even companies like Google and Apple and all have fluctuated by 65%. There is a central value, and the price actually oscillates around that, right? So sometimes it is dramatically overpriced and sometimes it's dramatically underpriced. It is your ability to wait for those underpriced situations and the smartness to sell when the prices are very high. It's very, very difficult to do it. I'm not saying you will always be able to do it. Therefore, we do SIPs and things like that. But largely, yes, where markets can give you some amazingly low prices for very attractive and good shares. And sometimes it could just be somebody who is doing just a pump and dump. So they're raising the price up and then they will dump the shares. Is it happening to some of the big groups in India? Maybe. Is it happening to PSU shares? Maybe. So you have to be careful also that, oh, that's a Tata Group company, things can't go wrong. No, you're not right. Things can go wrong with big companies, with good groups, with PSUs. Anything can happen. So you have bought a lot of, I bought Coal India, and my Coal India price was 120 rupees. I said 120 rupees, I will buy it at 10% dividend yield. and I said, okay, this is the price below which it can't go. I bought it 120, it went to 117, it went to 115, and I said, okay, I can just add on. So I added on. Luckily for me, Care, I bought it a high price. I think I bought it at 520 or something like that. Then it went down to 400, right? 410 or 400. I was waiting for it to touch 390. It didn't, but I luckily bought and reduced my cost, right? So these are some of the things you can do. Sometimes you go right, sometimes you go wrong. Well, the market gives you an opportunity to do everything. It allows you to make money, allows you to lose money, right? Both of these things happen and you pay the price for it. Unfortunately or fortunately, market first sends you the bill and then teaches you the lesson. So that you have to be ready. I think it's a Buffett quote saying that market is more like an auction market, and you can get yields which you can never get in a negotiated deal. I don't think I could have gone and negotiated with the Tatas to sell off their stake at 30 rupees in Tata Power. It does not matter how much money you have, at 30 rupees nobody would have given you the company. So that is a time when you know that the promoter could also be buying, right? So I think there was news that Tata Sons were buying. So remember, the Warren Buffett quotes are very useful, but you need to know how to apply it to Indian conditions. So that's our challenge, right? So there are a lot of times when if this is the equilibrium and the market is available here, and there is the equilibrium, market is available there. So you have to choose what to buy, what to sell, how you will hold on. So for me, holding on for dividends is much easier because the dividends don't fluctuate as much as the share price does. That we will talk separately.